Joby Aviation's up 98% this year and 167% in the last 12 months. But here's the question every investor should be asking themselves. Can this continue? Or is Joby about to stall out before the takeoff? Because yes, Joby's still pre-revenue. It's burning over $200 million a quarter just to keep the rotor spinning. And that kind of cash burn doesn't last forever. And yet, this stock has doubled while losing money faster than ever. NASA helped test its early designs. Toyota backed its manufacturing. And the Air Force here in the States literally gave it the first airworthiness approval for an electric vertical takeoff and landing company, eVTOL. So it's legit. But does that justify a multi-billion-dollar valuation before a single commercial flight is taken off? Well, here's the thing. Joby just finished stage 4 of the FAA certification process. They're only one step away from full approval. That means it's closer than ever to launching its air taxi service with Delta Airlines, and integration is already in place. But I'm watching something else, a signal that's hidden in plain sight. And insiders, they stopped selling. No insider buying yet, but the dumping slowed, exactly as the stock started to climb. Coincidence? Or a quiet vote of confidence? That's why in this video, I'm going to be breaking down Joby's financials, line by line, the cash flow, the burn, the timeline to commercial launch, so you can decide if this stock's about to fly or fall from here. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. Joby Aviation is an aerospace company pioneering the design of electric vertical takeoff and landing aircraft, or eVTOLs, which is said to change how people will move through cities. The company aims to make clean, quiet, all-electric air taxis that take off like a helicopter and fly like a plane. Its goal is to cut hours of land traffic into minutes in the air, revolutionizing urban mobility. In other words, imagine skipping traffic, not by luck, but by altitude. Joby is also building a full mobility as a service platform, which is basically, they want to become an Uber, but for the skies. Its passengers will be able to book flights through an application that essentially enables faster and cleaner trips from A to B. And if that sounds futuristic, that's because it is. And it's already happening faster than most of us even realize. Joby's technology is also recognized by some of the biggest brands in the industry. I mean, NASA, they helped in testing early designs. Toyota, which provided manufacturing expertise, and even the US Air Force, which granted Joby the first airworthiness approval for an eVTOL company. When the big names like NASA, Toyota, and the Air Force are on your side, you're not a dreamer, you're a contender. Now, at the time of recording, Joby holds a Part 135 air carrier certificate that shall allow it to operate commercial air taxi services once they're certified. And its runway is even more ready with a partnership with Delta Airlines that already integrates the company into its major routes into all of the big airports. And that partnership could be a key that opens the door to real passengers, not just prototypes. Aside from that, the company's biggest recent milestone was that they completed stage 4 of 5 in the FAA's certification process. That means Joby is now in the final stretch before receiving full FAA approval to begin commercial air taxi operations. Now, stage 5, that's the finish line. And every investor is watching to see if they can cross it. So, with all that out of the way, what's been going on with Joby stock? Well, the last time I covered it was trading at $17. Today, around $16. Slight dip. But we can expect dips like this because it's recently reached an all-time high of around $21. And pullbacks like this can shake out the weak investors. But they also tell you where the real conviction lies. Don't forget, Joby stock, it's up 98% year to date and 167% in the last 52 weeks. That kind of performance gets attention, but it also raises one big question. What is fueling it? Well, with the stock performing that well, you might be interested to know how many people are betting against future upside. Well, a quick and easy way to know that is by checking Joby's short volume ratio. The short volume ratio shows you how many short traders there are compared to the overall recent trades. And Joby has a 0.40 short volume ratio. That's not very high, though it is near half of all trades. And that indicates some bearish sentiment, but nothing too extreme. In English, it means there's skepticism, but not panic. The bears are circling, but they're not all in. Another way to gauge the stock's outlook is to look at insider trading activity. These can easily be found in market platforms or in SEC filings, but I think you'll agree that seeing it like this is easier. Anyway, Joby has seen some significant insider selling over the last year, though it has decreased somewhat in the last 3 months. Coincidentally, this is exactly when Joby's stock price started trending upward. To me, this suggests that executives are holding onto their shares in anticipation of better performance. And maybe even it's that stage 5 certification. But remember, this isn't a certainty, especially since we've seen no insider buying yet, at least in the last 3 months. Now, I've recently covered the risks to Joby Aviation, which you can watch up here. But do its financials support the recent price movement? It was something that was brought up recently on my Discord channel. So let's see if Joby's numbers are pushing the price up or if this is all hype, because hype alone can't fund a business. The numbers do. The company released its second quarter financials in early August. And let's just rip the band-aid off, right? Joby is still in pre-revenue, and net losses are growing due to increased expenses in the run-up to commercialization. Now, yes, it's normal for a company building the future, but only if that burn rate can stay under control. Now, let's take a closer look at the figures. In Q2, Joby spent about $168 million on operating expenses, roughly in line with recent quarters. However, the big difference between Q1 and Q2 is the negative other income indicated in the financials. So where did this come from? Well, according to the company's actual 10Q report, the quarterly financials document that they submit to the SEC, those were from a change in fair value of warrants and earnout shares. So this came from a drop in the paper value of some certain stock-related agreements. It's not actually money leaving the company. It's just an accounting adjustment. So I would just say that these losses look worse on paper than they actually are. And that matters when evaluating early-stage companies like this one. And then we can look at Joby's cash flow statement because it also gives us more insight. It's spending a lot, and that's expected. That's the cost of building an entirely new industry, upfront pain for potential long-term gain. But the company isn't exactly strapped for cash. With a recent $256 million successful stock offering bolstering its reserves. As a result, its cash position at the end of the quarter basically tripled to $337 million. And this is reflected neatly in its balance sheet. Current assets reached $1 billion, while liabilities were around just $59 million. And that resulted in a current ratio of 17. Now, current ratio measures a company's ability to pay its short-term obligations with short-term assets. That means Joby has $17 in cash and cash equivalents for every dollar of short-term debts and obligations. So this can easily secure a runway, at least for a while, and liquidity isn't an issue. So that's it for Joby's recent financials. Of course, I'll cover their upcoming third quarter report that's scheduled on November 5th, so be sure to watch out for it. And trust me, that report could be the make or break moment for Joby's next move. Now, with all that out of the way, is Joby stock a buy right now? Well, to answer that, let's see what Wall Street has to say about Joby Aviation. A consensus among 10 analysts rate the stock a hold, with a significant majority of them giving it a hold to a strong sell rating. Translation, the pros are cautious, maybe even too cautious. And that's completely reasonable, right? Because the company is still in pre-revenue stage. And to be fair, that's when opinions tend to split. Those who see risk and those who see opportunity. But one thing's for sure, Joby's full launch of its commercial air taxi services will be a game changer for the stock, because if it succeeds, it could redefine urban travel. If it fails, it'll be a case study of what ifs. Either way, the story's not over yet. But what do you think? Is Joby preparing for takeoff, or is it going to crash before reaching cruising altitude? Let me know in the comments below. And while you're there, of course, don't forget to like and subscribe, because it'll help others find the video, it'll support the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I want to thank you so much for watching, and I'll see you next time.